Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, let's just take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's get ready to welcome Dimitri Pargamonik to the stage. He's going to be discussing how to chart historical price volume of an option. How you doing, D?
Good morning, Will. How are you?
Great.
I'm sharing my screen here, and we'll go over an example how to look up the uh, the chart of an option price volume based on some questions that I got, and how do you pull that up? Excuse me. So let's go to the option chain and just go through that example and see what type of insights we could get about a particular options trading activities. And I'm going to use Google in our example. I'm going to type it into the search box. It's going to bring us to this Google summary page. And we want to go to the option chain. So on the left-hand side, hey, well, there's some background noise. On the left-hand side, we have this menu. Go to options, option chain, click on that, and now we're on the Google's option chain. I'm going to click on this menu to minimize it and expand our screen. And now what we want to do is look at a particular option that we may be interested in, and then get a history of where did this option trade, what was the volume in the option, to get perspective of that trading activity. I'm going to go to, let's just go select an expiration month. On the left-hand side here, we see a selection box that allows us to pick a particular expiration available for trading in Google. And we could see here we have the expiration listed, the at-the-money implied volatility, and the volume. So here, let's take a look at June 27th expiration. We see there are 10,700 contracts that traded in that expiration. We're going to click it, and that brings up the June 27th option expiration in Google on the right-hand side. And below, we have the option chain that shows us the call data on the left-hand side, the put data on the right-hand side. And here we see the volume to the corresponding option. So to bring up some analysis on that option, what we're going to do is click on the bidder offer. So let's just click on the ask side of that option. Let's do the 180 call. So I'm going to click on that. And when we do that, we get this ticket for analysis, buying the June 27 expiration 180 call for 248. And we're going to run this analysis. And this assumes now that you're looking to analyze this option from the perspective of purchasing it on its own. So we didn't select any other option or strategy. We're looking at it as just like a single leg option, purchasing it for the price that was populated over here. And we have these different analytics. And one of the things we in our analysis that we may want to review is, well, from the perspective of this option, what was the trading like for this option only in single legs, right? So right now we're only looking at trades that were either buy or sell, that didn't indicate multi-leg trades, because if this because there were trades in this option that could have been part of multi-leg trades like a call spread or butterfly. But from our perspective, we're looking at it just from a single leg trade. And here, if we go below, we see a price chart of this option, mark to market. And that's based on how did the value of this option change throughout the day. So not just the trading, but the value of the option will change because it's a derivative. So the bids and offers are moving along with the stock price. Implied volatility changes, decay. So we could see the price chart of this option based on its change in value as the time went on. And we have here a summary of that change in value. So we're looking at the midpoint price. So how do we look at the value of the option? Well, without trades, the way we could take a look at what the value of the option was at that moment, we could observe the bids and offers because those were firm bids and offers. People were willing to buy it or sell it at that moment. So that's where the market's value is, somewhere in between the bid and offer. So we used the midpoint and we could see the high, low, median, and average. Okay, so that's looking at the value of that option based on market. So let's go a little bit deeper and analyze the trading and the volume in this option, because this is only mark to market, and the option value could change, like we said, with 0 trades, 0 volume. So we're going to come up here under summary, and we're going to go to the historical charts. Okay, so the historical chart now brings up the same graph we looked at. It starts out with the value based on the time of the day, but we get more information now. Down here, we see the implied volatility of the option, and we see what the stock price did. So we could kind of, as this time goes by and we see that the value of this option changed, well, we could see what may have impacted that change. So we know implied volatility could have impacted it. So now we have the implied volatility chart and the stock price, right? The stock price is moving around, and that changes the value of that option. So now we have the stock price below. And for our purposes, what we wanted to do for this demonstration is to look at the trading volume. So we could click on over here, single leg trades. So this assumes you're looking at just single leg trades analysis, because you remember how we populated this, just to look at it from the buy side. So we're going to click on this single leg trade. And when you click on it, now we see the trading volume, which is in this gray areas. This is the trading volume in that 5-minute period. Okay. And then we see the VWAP price of that trading volume. So this purple line is showing us the VWAP price, the day's volume weighted average price as the time goes on. So this gives us an idea of the trading volume and the price impact of the trades throughout the day. And we could see here that there is some trading activity here in the morning, and then throughout the middle of the day, there's a little bit of trading activity, not as much as in the morning. You can see a little, little bars here and there. If you hover over, you can see 11 contracts traded, 9 contracts, and then right at the end of the day, we see a little bit of a pickup, 105 contracts, 75, 37. So it wasn't a ton of volume in this option. And as what was the 180 call? So we could see 900 13 contracts traded on the day. Not a ton of volume, but we could see now the distribution of that volume throughout the day. A little bit, spikes in the morning and at the end of the day with not a lot of activity in the middle. And another thing we could analyze is the single leg trades and the implied volatilities that they traded at. So we could come down here and let's click on this. And now we have the same volume bars as the top, right? Because the trading volume would be on the same period. Instead of looking at the price of the option, now we're looking at the implied volatility of the trades. And this shows us how the implied vol, the volume weighted average price of the implied volatility. So it looks kind of like maybe it stayed close to where it started, it maybe went down a little bit throughout the day. And if we wanted to see the summary of it, we could click on these stats. And here, now we could see where did the weighted average volatility trade. So we could see on average it's traded at 26, the median was 26, the high was implied volatility traded at was 26.5, the low was 25.5, and the last was 26.1. And that helps us quickly with the trading range of this option in terms of implied volatility. So we could gauge where we think the fair value of the option is based on these historical trades, and helps us also determine potentially where would we want to trade around, right? Because we see, well, what is a potential price if you're looking at this option? What is a potentially good price to trade at, given this information, right? Do you want to pay 27 vol if you know that the average volatility it's been trading at was 26? Well, that might be a little bit high. Do you want to sell it at 24 vol? Well, given this historical range, it helps you with price discovery and where you may want to trade around that information. So I'm going to close this for a second. And what if we wanted to expand it? Maybe we wanted to give it, let's say, a two-day range. So I'm going to go back to June 11th, and I'm going to reload this chart. And now we have the same situation, but now we expanded it over 2 days. Maybe we wanted to see how this option how this option behaved, or the dynamics over a 2-day period, because now it includes more decay, more implied volatility change, potentially more trades. So we can bring up those trades. And now we see the trading volume June 11th versus June 12th. So it looked similar, right? The volume profile looks similar. We have some trading activity in the morning, then at the end of the day, similar to this. And it looks like, the volume bars are close together. So we didn't have like a ton more in one day versus the other. On a visual basis, we see that the volume weighted average price dropped significantly from over here to over here. We'll say, let me see if I can hover over that purple, but we did see a drop, and this could be explained by a drop also in the stock price. Right? So it looks like the stock price also had a drop in price. But at the same time, some of that was offset by increased implied volatility. So even though there was a drop in the price of the option, which looks like it could be attributed to its delta. There was an increase in implied volatility, which may have offset some of that drop in premium. So we could, if you hover over here, you got like around 25 IV, right? Versus, now we're in the 26 IV range. And I think I'm going to stop there. The idea behind this tool is to look at a particular option that you're considering, and maybe you've seen trading volume, and quickly bring up some of the historical data to get a visual and summary of that trading volume, traded price, and the traded implied volatility.
Very interesting discussion, D. Thanks for bringing that to the Chameleon community. You have a great trading day, my friend. Everyone have a great day trading, and enjoy the weekend. We will see everyone on Monday. Thanks, D.
Bye, everyone. Thanks.
All right. Have a great day, buddy. Bye. Everyone, remember to like and follow us on YouTube and all the platforms you're watching us on. I know we're streaming on LinkedIn now, and also on Instagram and all the other platforms. So everyone following us, thank you. Everyone have a great, safe trading day and a great weekend.